Let's welcome on board then Keshav Bhajanka, ED at Century Plyboards, India, to chat about where their business is headed. Mr. Bhajanka, thanks so much for joining in. Can you hear me?
Yes, I can hear you.
Okay, very well. Just wanted to understand, despite a growth in the top line, you are witnessing continued pressure on the margins. What is leading to this compression and pressure?
Currently we are focusing on volume growth within certain segments of the business. So suppose you look at the plywood segment, the overall market for plywood is not very good. The unorganized sector is struggling to deal with GST. Certain players have implemented price hikes, certain players have not implemented price hikes. As such, there's a lot of uncertainty in the market. At this point in time, normally if there would be any raw material price increase or cost increase, we would pass it on to the market immediately. But at this point in time, I don't think that would be the correct strategy because the market itself is quite volatile. As such, in the short term, we are focusing more on ensuring that our volume growth continues, even at the risk of sacrificing margins by say 100-150 basis points.
Right. Hi there. Thanks so much for joining in. Wanted to get in a sense as to the competition outlook. There's been stiff competition, but despite that, you are seeing an improvement in the MDF margins. Would you attribute this to the price cuts and the installation of the new plant? And do you believe that competitive intensity will continue? And how are you, what's the strategy in place to alleviate the pressure from that?
So in MDF, there is oversupply in the market currently. What has happened is that over the course of the past year and a half, the total supply of MDF, the total manufacturing capacity of MDF in India has more than doubled. It has become close to 2.5 times. Because of this, there has been extreme pressure on sales. The industry as a whole has undertaken a lot of price correction, I believe to the tune of 8 to 9% within the past 9 to 12 months, and this has put a lot of pressure on margins. However, now we are seeing the market growing by 20 to 25%. Our capacity utilization last quarter was quite good. This quarter again, I think we'll be at 80% plus capacity utilization. So I think that even though prices are decreasing, the higher capacity utilization is going to ensure that our margins remain stable at between the 13 to 15% sort of a range. And I think that going forward within the next 2-3 quarters, this is the sort of figure that we should be looking at, after which, because there are no large additional capacities that are coming in now, so now the demand growth is going to be shared between the existing players. As such, I think within or after the next 1 year, you will see margins shooting up as the demand and supply imbalance reduces.
Keshav, also just looking at where we could possibly see that demand start to pick up from. We've been looking at green shoots in real estate as well. Would you agree, and do you see any pickup on the back of that?
You see, till last quarter, the demand seemed quite good and it seemed to be growing. This quarter, I believe there has been a little bit of, I don't know whether it is the election sentiment or whether it is, but there seems to be a slight slowdown in the demand. But I'm sure that this is a temporary phenomenon, maybe for this quarter and maybe till the elections are over in the next quarter, post which again we should be seeing good growth for the industry as a whole.
What about your expansion plans? Can you tell us what is your capex which is slated for the same, and what kind of an outlook you have penciled in for your volume growth as well?
So for next year, we are definitely looking at 15% plus volume growth in plywood. We are looking at a 20% plus volume growth in laminates, and we'll be looking at 20 to 25% volume growth in MDF. With regards to capex, I don't think we have any major frozen capex plans as of now. Currently, we have a new unit that is coming on board in Gabon, which is not going to be very capital intensive. I believe the investment is going to be to the tune or under 30 crores rather. That will be the total investment in the new unit coming up. And besides this, we don't have any major frozen capex plans as on date.
Looking aggressively at the mid segment as well, what's the price differential there when it comes to the premium and mid market segment, and the kind of impact this will have on realizations and margins?
If you look at the top end segment of plywood, where we would be selling, suppose, a Century PF or Century Club Prime, the difference between that and the lowest rung that we would be selling in terms of a Ceramic PF would be in excess of 30%. So that is the sort of price gap that exists between both. However, the composition of the raw materials for both products is completely different. As such, the margin structure is pretty much the same, or it would be a little higher in the case of Century PF, but the differential would not be too much from a Cent, which is the lowest end brand.
Right. So tell me, you've got a plan to focus on mid-segment. What is the price differential between the premium segment and mid-segment, like you just pointed out? And, wanted to understand on a larger extent, how is it that your realizations and margins are going to pan out for the full year? I know near-term visibility is something that you've talked about, but just going forward, once we also see a pickup, like you said, after the elections, where is it that we can see business head in terms of numbers?
Okay, like I told you, the difference between the top end segment and the lower end segment would be around 30%. So when I say lower end segment for Century, I actually mean the mid segment of the market. So the difference between our product and the mid segment of the market would be to the tune of 30-odd%. Going forward in the long term, or rather for the next whole year, I would be looking at plywood margins of closer to 14 to 15%, laminate margins which should be close to the same, it could be 100 basis points lower, and MDF margins at 15% plus for the whole of the next year.
Right. Could you also tell me about the turnaround in the laminates division and what's actually aided this?
So in laminates, we had a new capacity that got on board. So till then, we had a supply constraint. Post the new capacity coming on board, obviously there was increased supply, which helped us in supplying the market. We have been able to expand the sale in a lower segment of material. Till now, we are primarily concentrating on the 1 mm category, which is the higher end, highest realization, highest margin category. But now we have been able to create a presence in the lower end category, which is the 0.8 mm, where the margins would be lower, but where the scope for volume growth is far higher. So I think this trend is going to continue, and in the next year, we should be looking at a 20% plus growth for laminates as a category. 20% volume growth.
All right, so you sound very optimistic on the volume growth front, double digits being targeted, you're talking about margins as well being maintained. So we'll let you go on that note, and thanks very much for spelling out how the overall business is shaping up as well as the outlook. Well, that's the word coming in from the management of Century Ply, but let's deviate from equities for a moment and check in on the world of commodities. Pankaj joins in to give us a heads up as to how things are looking on that front.